Hello, Eddie from Blackball Assets. We hear a lot in the news about China and Russia that are buying gold in large quantities. But before they can buy it, somebody has to mine it and somebody has to refine it. Today we would like to talk about a company that is mining gold in Guyana. The name of the company is Gold Source Incorporated. Gold Source Mines is an exploration company with two projects, which are Eagle Mountain in Guyana in South America and the Border Coal project in Saskatchewan, Canada. For this presentation, I only use the given details of the Eagle Mountain project in Guyana. The Eagle Mountain project is a high-grade gold project and the company is focused on the development and construction of an open pit mine with an expected mine life of 7 to 9 years. Gold Source has a market cap of 49.9 million Canadian dollar with 428.4 million fully diluted shares. This analysis is based on numbers of April 22, 2019 with a gold price of $1,274 which was running during the day, so it was not based on the gold price at closing time. You can find Gold Source mines on the Canadian Venture Exchange under GXS. The differences between US and Canadian dollar are based on the currency rates of April 22, 2019. Please take notion of the fact that I live in Europe and that I calculated US dollars to euros and euros to Canadian dollars. This may cause a slight deviation in the actual exchange rate. When we look at the numbers of the 43-101 compliant, we can see that they have inferred resources, 306,000 ounces, which are used in the PEA of 2014 and the 43.101 compliant. And they also have indicated resources, 74,000 ounces. These are also used in the PEA of 2014 and in the 43.101 compliant. Recently new results show inferred resources of 486 ounces and indicated resources of 114,000 ounces of gold. At the moment they have altogether 980,000 ounces of resources in the ground. That represents a company share price of 2.91 Canadian dollar, calculated according to given numbers in the company presentation. As this is an estimation of resources, we can look at the value based on grams per ton. The reason why I do this is because the resources are not proven and probable reserves and therefore a discount is advisable. When we look at the inferred resources of 7,202,000 tons with 1.33 grams gold per ton, this gives a metal value of 48.77 US dollar per ton or 65.09 Canadian dollars. This brings the estimated value to 468.8 million Canadian dollar. Personally, I use a discount of 35% on inferred resources, what brings its value to 304.7 million Canadian dollar. I give rounded numbers in the presentation. For the exact numbers you can recapitulate to the presentation in our blog on blackballassets.com. Then let us look at the indicated resources of 1,590,000 tons with 1.45 grams gold per ton, what shows a metal value of 53.57 US dollar per ton or 71.55 Canadian dollar and gives an estimated value of 113.7 million Canadian dollar. As these are indicated resources in the ground, I use a discount rate of 20%, what brings the metal value to 91 million Canadian dollar. Recently discovered resources show indicated resources of 2,331,000 tons with 1.52 grams of gold per ton. This represents a metal value of 56.16 US dollar per ton or 74.94 Canadian dollar per ton, and it brings the value of this indicated resources to 174.7 million Canadian dollars. Again, I take a discount of 20%, what will show a value of 139.75 million Canadian dollars. For the recent discovered inferred resources of 13,433,000 tons with 1.13 grams gold per ton, the metal value is 41.75 US dollar per ton or 55.72 Canadian dollars per ton. The total value of the recently discovered inferred resources is 748.5 million Canadian dollars. For this inferred resources, I take again a discount of 35%, what brings the metal value to 486.5 million Canadian dollars. This brings the total value of the deposit to 1.022 billion Canadian dollar and makes that the share price represents a present value of 2.39 Canadian dollar. My conclusion is that the current share price is heavily undervalued, and this current share price of 0.16 Canadian dollar has a minimum growth potential of 1,450% based on what the deposits are today. As the company is still doing further exploration, this estimated share price is at the bottom of its fork, and according to new drilling results and increased resources, it can have a strong upcycle in value. When the gold price will increase, the share price normally will increase as well. Gold Source Mines has no debt, and they have a very experienced management team. Guyana is mining friendly and is the only English-speaking country in South America. It is ruled under British law and is a secular democracy. There are no social issues and has a friendly community. There seems to be no environmental issues. It has an excellent infrastructure, and the fact that they have already a 1,000 ton per day pilot processing plant reduces the investment risks. They can do in-house drilling exploration with 2 own rigs and adding ounces of gold every day. The company is still drilling to expand resources. Gold Source is heading towards a pre-feasibility study in the first half of 2020 and feasibility study and construction financing in the second half of 2020. Rule of thumb is that production will follow somewhere in 2021 and 2022. The quick ratio based on the unaudited financial statements of September 2018 is 2.54, which is low for an exploration and development company. The fact that they have their own in-house drilling exploration saves a lot of money, and that Eric Sprott has invested in the company and owns 8.7% of its shares will probably give no problems in funding the project. In the mining curve, we can see where the company is positioned and where they are heading. Next time we talk about another exploration, development or mining company. If you like this video, then give us a thumbs up or subscribe to our channel.